Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how we lost a little over $226 from swing trading stocks. We're going to be talking about our entry point, our exit point, and kind of my thought process behind it. And more importantly, what can we learn from this play? What can we learn, right? I never look at losses as like something to be shameful of because, you could have the best stock, the best strategy, and just still the stock just didn't pan out. It happens all the time. You could have an A plus setup and still lose money. So we're going to look at kind of what happened, what should we improve on for 2025. So I hope you guys all enjoyed it. If you guys do, hit that like button and subscribe. And if you guys want to learn more about swing trading, how I swing trade, my strategies, my approach, check out our school. It's fantastic. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. It's not a get rich quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years of swing trading. So check it out down below. And you guys can get 20% off by using code YouTube. Only one spot left for that code. So use that code, sign up. I'll see you guys in there. And guys, let's turn to the computer and look at our loss. All right, so the stock that we traded was ticker symbol SCI. Now, to be very, very transparent behind this, I'm the type of trader where when I'm wrong, and I'm just going to get out with a small loss. And if the stock squeezes up again, in the next couple of days, so be it, right? I would rather cut my losses early and just move on to other opportunity rather than try to get in and out of positions all day long, So for me with SCI, let's talk about why we entered here first. So the thought process I had was heavy support here on this red line, which is the 200-day moving average line. You guys can see it hits these support lines in the past and had good buying pressure from them. So as the stock sold off from about $80 to $89 all the way down to $76, this was a huge sell-off, right? You can see this huge sell-off of about 13%. So I thought, okay, we could get in on an undervalued point where the stock hits that 200-day moving average line, pops up, right, and we make a little money off this, right? It seems logical. It was also undervalued on the RSI, which is the relative strength index. The last time it was trading for, a 19 on the RSI was a little bit in here where we had some good buying pressure. But previous to that, it's been a while where it was trading that low. Let's see if we can find the last spot here. We'll just zoom out. So the last time was literally all the way back in here, where the stock literally sold off from $9 all the way to $6.60 and immediately got good buying pressure back up to almost $8. So I thought, okay, we're entering at a very, very undervalued spot for this stock, right? You can see the nice steady buying pressure, the good upward trend, and all that stuff. So now I'm looking at this like really, really good here. So another thing that we did is we went to the hourly time frame. We went to the hourly time frame and I thought, okay, the stock has heavy support right here near and around, let's see here, near and around the 77.14 mark. So we could virtually enter here, keep our stop loss below like 75 was my initial thought. Let's go ahead and draw that out. So entering here, keeping our stop loss, about 2% or so from the price of entry for a possible breakout and push back up to resistance. So it's a very, very good risk and reward type situation, with like a 6-7 to 1 risk and reward there, which is awesome. That's exactly what we look for. And, even if we have, a 7 to 1 risk and reward here, we'll go ahead and draw that out, and you imagine you find a stock like this once a week, trading 2%, and you guys have like $1,000 starting out. Now your win-loss percentage can be extremely low, at 30%, and you're still making money with this type of risk management. So I was very confident, and I thought, okay, if I am part of that 30%, I'm gonna make a decent amount of money. But unfortunately, as the stock started getting some sell-off, breaking through that support line, and we just decided just to get out of the trade and move on to other opportunity. Now, there's a lot of opportunity right now, and the reason I say that is because, what we're seeing here is just the general market here sell off. We're seeing the S&P 500, literally stair stepping its way down each and every day, which for me, I love this. This looks for massive amount of sell off, brings opportunity. So one of the positions that we actually entered was on VOO, which is the Vanguard S&P 500. This was the new trade, hits at 90-day moving average line, small trade, and so if it continues to sell off, guess what? We're going to just continue to buy more. Recessions and crashes, you can't be fearful of them. You have to go in, head over steam, ready to rock and roll. So with VU, this is a very, very good ETF, tracks top 500 companies. Some other ones that carry potential. NVIDIA, NVDA. NVIDIA has seen some good sell-off. Now the very similar situation. I haven't got in on this one yet, but I do plan on it if it does come down to like the 118 mark, which would be a sell-off. Let's go ahead and draw that out. A sell-off here of about another 10%. So it's definitely doable. Same with like MasterCard is another one that I'm looking at getting into because it's kind of fallen down below those moving average lines. Could go a light trade, get in low, try to get on that 200-day moving average line. Very, very, very good trade. Another one here is Oracle, OR, I think CL is the ticker. Now, Oracle is trading near and around that 200-day moving average line, which is a heavy support for the stock, right? You guys can see in the past where it hits it, and we have good buying pressure from it. So definitely one to see what happens as the stock does sell off. So, yes, we did lose money, right? Looking at our trading journal, our performance here is still astonishing, with a 92% success rate in a 7% loss. So I'm not too worried about consistency. I'm more worried about just taking advantage of opportunity, not chasing plays that could be almost like a little trap. Just be cautious, right? Be cautious. As stocks sell off, find ETFs and companies you believe in to kind of start swing trading. Get in on them, and you can always average down as these stocks sell off. So, guys, I hope you guys all enjoyed this. If you did, hit that like button, subscribe. If you guys want to learn more about swing trading, check out our school. If you guys want to sign up with Moomoo, which is the broker I am using, I'll put a link to them down below. You guys can get up to 20 free stock just by signing up. So if you want to learn more, if you want to start trading, if you want to, start working with your charting, indicator scanning, check it out down below. And we'll see you guys. Hope you guys all enjoyed it. Like, subscribe, and don't forget code YouTube 20% off. Take care.